Good morning, Richard Calhoun, Creekside Realty. 40 years of working with buyers and sellers in Silicon Valley. My contact information on the bottom page. We'll come back to this slide. We'll get right into the data. This is looking at supply and demand. Your supply is the blue line down here. It's the current level of inventory compared to the percentage of inventory you'd expect to have, which is the 5-year median 2015 through 19, which is represented by the yellow horizontal line at 100%. So you can see inventory for the macro data, Santa Clara, San Mateo County, single-family condos and townhouses is about 70% of where you'd expect it to be. The number of new listings coming on the market each week is the gray line, and it's been basically right at 100%. You have the right number of new listings coming on the marketplace, but below the right number of listings on the marketplace. How is that possible? It's possible when you flip over to the red line, the demand slide, and you can see the number of offers being accepted is way above where you'd expect it to be, currently about 20% above. Ran most of last year about 15% above. Moving on to the supply-demand ratio, this is probably the single biggest key indicator. It looks at the ratio between supply and demand. It's how quickly does the market turn over, and in a free economy, supply and demand is supposed to predict future pricing. Again, the concept's the same, but instead of presenting the data on a percentage basis, it's the raw data. So the yellow line is where the 5-year median days unsold inventory would normally be at this time of the year. And normally it'd be somewhere around 25 days of unsold inventory. Strongly in a seller's marketplace, anything between below 40 is what I consider to be a strong seller's marketplace, 40 to 80 a balanced, and above 80 to be a buyer's marketplace. And yes, we have been in both of those other conditions, just not any time recently. This year, we're down here at basically record low levels. Somewhere it looks like around 13 days of unsold inventory. Looks to me like it's below 15. And again, this is macro data, Santa Clara, San Mateo County, single family homes, condos, and townhouses. This slide is very interesting. This looks at the amount the buyers are overbidding, how much pressure the buyers feeling. The purple line is the current line, and it bested our best year ever by quite a bit. The dotted red line is the best month we ever had, April 2018. Just last week, we were basically right equal to our best month data ever. And everything on here is weekly data, 22 weeks of weekly data, except for the two dotted lines on the extreme, the best month ever and the worst month. Those are monthly data. I just don't have the historical data for the weekly data. So now we've gone from last week being essentially tied for the best month ever to now blowing it away, and we're blowing it away pretty significantly. The way I would read that is the best month ever, 55% of the sellers were getting 10% above their asking price. Now they're up here probably at 13.5% above their asking price. So a 3.5% jump from the best month ever. What this does, the rapid jump up, shows that this is a price increase being driven, in my opinion, by the buyers, because the sellers can look at what the market is ahead of time. And when you're looking at the total global marketplace, you sort of assume that the amount of people that are pricing their home under and by how much they're pricing their home under the market has remained the same. So now that you have this huge jump up, it's the buyers that are coming in and feeling the pressure to bid that extra amount over to get the overbidding. So the height of that line is pretty significant. We are in absolute record territory, and that's going back to data from 1998. It's pretty amazing. This is a breakdown of the key components. You look at the inventory in Santa Clara County single family homes. We have about 55% of the inventory we'd expect. You have about 82% in San Mateo County. In Santa Clara condos, you have about 104%. And in the base city condos, you're around 230%. So you have more inventory in San Mateo County condos than you'd expect to have at this time of the year. I still have a little question about my condo data, specifically the inventory. I just don't believe that we have double the inventory that we typically have, and I need to investigate that still. If you look at your days of unsold inventory, you can see my little puzzlement when you look at these different areas. Even though it looks like it's plotting at about 13 days of unsold inventory, it has to be plotting it bigger than 15, because none of the micro market areas that make it up are lower than 15, and it's going to be less than 16.3, but pretty close, because 16.3 is the biggest geographical area, single family homes in Santa Clara County. But you can see there hasn't been much change from last week. And again, anything between 40 and 80 is a balanced marketplace. When you're in these numbers in the 15 to 19 range, that's a very strong seller's marketplace. frequency of overbidding, we're in record territory as far as the frequency of overbidding. We're at 85.5% in Santa Clara County, 82% in San Mateo County, dropping down to 75 and 60% in condos and townhouses in the two counties. The magnitude of overbidding is again in record high territory for Santa Clara County. I know Santa Clara County was about 112, and it may have been 110 and 112%, but Santa Clara County is clearly at a record high number at 115%, up from 114% just last week. You can see very strong overbidding in San Mateo County at 13%. In condos and townhouses is more around 7%. And then the appreciation, and this is over the entire median price for transactions that closed in 2020. And this is when that record high hit. So the peak appreciation was 24.8% prior to this week, and now we're at 27.7%. So we're basically now over the peak pricing of last year and probably will continue to go up. San Mateo County single family homes is not yet back up to the peak pricing of 2020. There tends to be overshoot and things of that nature in 2021, and that happens anytime you have a strong marketplace. San Mateo County just hasn't come roaring back yet. Same thing with the condos and townhouses. They're both below the record peak in 2021, which was up 19 and 16% from the 2020 pricing for the entire calendar year. With that, we'll go over a recap before taking any questions. To get to the archive on YouTube of these episodes, which I have up there for every week for almost 2 years now, I guess it is. If you add 2022, the year, you get to the live presentations that are held Saturday morning at 9 a.m. If you add the letter H, 2022, 02, and then 19, you get to the handout, which is not yet posted for this week. That's the PowerPoints that I'm going over if you want to look at them more carefully without bringing up the video. The video is the root URL, and to get to a specific episode, you put in the year, month, date code after the root URL. My contact information again is at the bottom, and with that, I'll pause to see if there's any questions. Not seeing any questions, I'll move on. This is the key indicators in the different micro market areas. So we're starting off with days on unsold inventory. The redder the color, the lower the number. I go saturated red at 7. So the one that's saturated red right now is Foster City's Redwood Shores area in San Mateo County. That is a very small micro market area though, so it really doesn't tell you much about the market. The next is the moderate low areas, which are in Santa Clara County at 8.8 days. That's your Milpitas, Berryessa, Blossom Valley, and Santa Teresa geographically. And then you can see that a lot of the areas are somewhere around 15%. You can see the countywide data is sitting at 16.3%. Then you come down to condos, and the bottom part down here is San Mateo County. You can see their range is roughly the same, maybe a little bit higher. It's a little bit higher in the expensive areas, Menlo Park, Atherton, and also on the coast at 25 days. The expensive areas in Menlo Park, Atherton at 50 days, that's what I consider to be a balanced marketplace, which is why there's no cat coloring there. It's in that magic 40 to 80 range that we are in occasionally, but we tend not to be in there for very long. We tend to be passing through in one direction or the other. The condos in Santa Clara County are listed here. And then in San Mateo County, and I did some data updating, and looks like my data might have been incorrect in the past, but the North County is showing at 81. So you can see a little bit of a blue tinge to it. We are starting to be into that buyer's marketplace in condos in the north area of San Mateo County, which are things like Daly City. Then the frequency of overbidding is the same concept. The redder the color, the more frequent the overbidding is. The highest color I'm seeing right off the bat is Cupertino Sunnyvale at essentially 97%. I believe it goes saturated red at 95%. You can see these are all very strong numbers in each one of the micro market areas. And then the concept is the same. You can see condos and townhouses are clearly not as red as single family homes. There's a big push to be into single family homes. And this is the magnitude of overbidding. You can see the ranges from 103% in the expensive areas in San Mateo County up to 123% in Cupertino Sunnyvale. And you can see the bulk of them are somewhere right around 116% over what the seller is asking. And again, the condos you can see are still respectable with about 7% overbidding, but you can see right off the bat with the lower, less intense red and the pinker color, there is not quite as much overbidding in magnitude. Then this is no longer a hot cold marketplace, but a pricing indicator. I do the color based on the median price, which is the middle number. The number to the left is the cheapest 10 percentile in that micro market area. The number to the right is the most expensive 10 percentile or the 90 percentile in that micro market area. For counties, I do it in thousands, which is why the K, and the micro market areas are all in millions. And I do that just so it jumps out at you that this is countywide data, this is countywide data, and this is countywide data. All the others are micro market areas. So you can see the most expensive micro market area is the expensive areas in San Mateo County, followed by the Los Altos Palo Alto area, followed by Saratoga, Los Gatos, followed by Saratoga, Los Gatos. And then it gets to be jumping down here to Foster City, Redwood Shores. And then it comes into Cupertino, Sunnyvale. And then it's going to be into Redwood City. Redwood City is white in color because that's typically the median price. And then as you go into the blue colors, you probably are up here in moderate Campbell, Santa Clara, Willow Glen, Cambrian, followed by the coast. And as you go deeper, lower in price, you go deeper and deeper in blue. In condos, I start with the highest being red because that's below the level of the median price for a single family home, and then just shade down in the blue. And again, I'll just point out the median numbers are doing the color, and the median numbers here are a little further apart. I think I did have a data cross-linked in my data. It hasn't changed significantly. The numbers are still pretty close together. The area that changed the most, I believe, is going to be the Bay cities. I think that number had been being reported out as somewhere around 900, and now it's 1 million. It's not much of a change, but I think I was cross-reporting a different micro market area. Here's the number of new listings coming on the marketplace. This starts off the year being the blue data. This is in raw counts. This is the macro data. You can see that the yellow line is where you'd expect it to be. We're essentially having exactly the right number of new listings coming on the market every week. The vertical purple line separates 2022 on the left from 2021 on the right. To get the separation, I actually add a week in 2021. So week 9 here is really week number 8. You have to subtract off 1 week, and that way you don't lose data. So you can see that the number of new listings is right where you'd expect it to be based on last year. It's right where you'd expect it to be based on the 5-year median. Here is the total active inventory. This is what's available for buyers to buy. This is why the market's on fire. You normally have about 1,250 listings. We're only down here around 900, maybe 850 listings. 875 looks a little bit more accurate. You can see last year at this time, we were actually above the yellow line, and we were actually even higher up at the beginning of part of 2021. But that surplus in demand that we were experiencing took away that surplus amount of inventory, got you down to the normal level of inventory, then a shortage. And this year we're maintaining that shortage, and it looks like the shortage is going to continue to expand. This is the demand side, the number of new offers coming on the marketplace each week. You can see the blue line is above the yellow line by quite a bit, more so than it was last year. You might point out that right here that it was actually less for the first 2 weeks. I'm going to maintain that that's just because of the calendar event. This year, January 1st occurred on a Saturday, so my week starts on a Saturday. So my first week was January 1st through January 7th. That's the earliest the week can have. It was impacted strongly by New Year's, where in previous years in the 5-year benchmark, it would have been like January 2nd through the 8th. So New Year's was in the previous week and wasn't in week number 1. So the holiday being in this year in the blue line data impacted the first couple data points. Now we're far enough away, it's not impacting, and you can see it's clearly above the yellow line. Moving on to days of unsold inventory over time. You can see all the numbers are down here. They've ticked up a little bit. This is the upshoot for the holiday, then the recovery, and now you're basically back at the normal levels. You can see the impact of New Year's every year, and this is the COVID impact. But you can see basically once we were able to show houses, we came back into the superheated marketplace and have been there ever since. Here's the days of unsold inventory marked out geographically. The red of the color, the hot of the marketplace. Your white color is a balanced marketplace. It's again the expensive areas in San Mateo County, and it's barely balanced at 50.8 days of unsold inventory. This is the frequency of overbidding. How common is it overbidding? You can see we're up here. We're down a little bit from last week, but at 85, north of 85% for the entire area. That's definitely a record record high frequency of overbidding. This is frequency of overbidding over time. The red line is Santa Clara County single family homes, San Mateo County in the brown line single family homes, and then Santa Clara County condos and townhouses. This is the frequency of overbidding done out geographically. Again, the redder the color, the more frequent the overbidding is. The white color is basically right on the threshold. Basically 33 to 50% I define arbitrarily as a balanced marketplace. So at 50.2.4, you can see there's just a shade of pink here. It's a little bit harder to see on the map, but it's going to be the same color. Here's the magnitude overbidding. Look at how much this has jumped up the last 2 weeks. This is because this 110 was being pulled down from transactions in the holiday season from 2021. If you look back now, we're in week number 7. So if you go back 5 weeks, you're out of New Year's and you're having the full force of the overbidding, which is somewhere around 115.5% of the typical buyer overpays 115.5%. Now that is the average overbidding versus the median. And the median, I purposely didn't select that data because there's going to be a lot of years when you're in anywhere close to a balanced marketplace where it's going to be 100 and not showing any change. There isn't that much difference right now between the median and the average overbidding, which means everybody's overbidding about the same amount. I think the median was about 114.3%. So it's right up there. 50% of the sellers or buyers are paying more than 14% over the asking price. 50% are paying below. And I'll just throw out a comment here real quick too. There are also a few transactions where the listing is going below the asking price. Not very many, but some. This is the overbidding over time. You can see that I haven't upgraded the scale on this and it's only goes up to 115%. So I need to upgrade it. I thought I had, but it's not showing on the graph. You can see San Mateo County single family homes is north of 113%. Santa Clara County condos is coming up quite a bit at 107%, up fairly dramatically in just the last couple of weeks. Here's the magnitude of overbidding geographically, the same concept. The redder the color, the more magnitude, the higher the buyers are overpaying. You can see the range from Cupertino, Sunnyvale at 124% down to a low of 103% in the expensive areas. This is the graph we talked about earlier, bringing it up a second time, mostly to look at this. So now you can see here's the last 10 weeks. So in 10 weeks, you went from a typical overbidding right here, say at 50% of 5% to a typical overbidding of somewhere around 112.5%. So there's been a 7.5% jump in the last couple weeks. And you can see, this is last week. 2 weeks ago was the gray line, which is right here, and then 3 weeks. So in 3 weeks, you went from 105% overbidding to 112.5%. So a 7.5 overbidding increase in just 4 weeks. And that's pretty significant. That would essentially say that whatever amount the sellers increased their price coming into the new year, buyers added 7.5% to that. And that's because the appraisal concept is you're always using back data to come up with pricing. This is the median price of the 3 major components. This is pretty surprising. Look at this decrease over time here, pretty rapid in condos and townhouses. Now, I suspect that is not property values, but a shift in the micro market to more affordable geographical areas. So for example, if you are selling condos and townhouses in Campbell, Cupertino, and then all of a sudden you start selling more condos and townhouses in East San Jose, the price there is going to drop even if values are going up. And that's why I got involved in this micro market data, is even countywide data is often misleading. And I believe that's a perfect example of the misleading of the countywide data. Again, the middle number is the median price. The number to the left is the cheapest 10 percentile in that geographical area. The number to the right is the highest 90 percentile. And there is no county data numbers displayed here because that would cover the whole map. So that's why everything on here is in millions and there's no case for countywide data. Here is your record highs. As you start seeing more yellow on the left-hand side, you're starting to see that we're into record pricing territories. Some of the areas are still lagging behind. Some of this is just statistical fluctuation. The difference between 28 and 25.5 is not much. The difference between 30 and 29 is not much. But you can see there's very few areas where the peak was way back in the past. And even those, they're approaching the peak. So you have broad broad-based advancement in pricing going on. This is looking at the data for February. Well, Richard, you can't have data for February until you get back to March 7th, and that's correct. So here, instead of using data collected on March the 8th through March the 7th, I'm using data collected on March the 19th through the 18th and sort of doing a forward looking, where are we looking at? So you're at 393 properties on the marketplace, a record low. I do expect that number to increase over the next couple of weeks. Will we catch the 615? I don't think so. Will we end up around 450, 500? Likely. So it will be a record low inventory when we get there. And the DUI, I don't really expect to have much of a change in one direction or the other. So at 16 days, you're basically having the fastest marketplace that we ever had. Some of these numbers when the market was slow at 115 and 185 shows that DUI does get above 40. We haven't seen that in a long time, but it does get up there. Median days on the market, 7. That's only because the sellers are keeping the house on the marketplace. And I'll go back up here to active listings. The active listings on Friday night at midnight were only 4 days. That means half the homes that were on the market on Friday night had come on the market that week. Back to offers accepted, number of offers accepted, you're at 850. I expect this number to climb. Will it get up to 927? Absolutely. I think it will surpass 927. No way to know for sure, but I think it will. Now you get down to closings. With closings, you get sale price, and that's what we concentrate on. Here you're getting 115% of the overbidding. You can see that blows away even the 112% back in 2018, which was sort of the strongest year we had from the latter part of 17 into the mid part of 18 was the strongest, and now we're outperforming that. 85% of the list prices, sale prices above the list price. I would expect both of these numbers to increase slightly by the time we get to March 8. Here's your median price, $1,750. That's now a new record high. I did look at it myself, and I don't have a graph to show easily, but the previous peak was 1704, 1,704,000. Now you're at 1,750,000. And then you get down here at the bottom, you have of each of the categories, you have the typical square footage, bedrooms and bathroom count, so you have some idea. This chart is very similar data, but this data is for the month of January, because we're all the way through January and you compare, but it's sort of looking in the rearview mirror, but at least it's comparing apples to apples for the last 20 years. And with that, I'm done. Here's back to the URLs. If anyone has any questions, go ahead and speak up. Not hearing anybody. Have a nice week, everybody. Take care. Bye for now.